Believe it or not, despite what you hear on the internet, infinite banking doesn't always work. In fact, why doesn't it always work? Is there something wrong with it? No. But if you're not careful, if you do it the wrong way, it can actually cost you lots and lots of money, and that's something we want to avoid, isn't it? Let me explain 5 ways you can actually avoid losing this money and get it to work in your favor so that it actually does work for you. And be sure you watch all of these, because these are points that the other infinite banking people do not want you to know, because it costs them lots of money rather than making you lots of money. So be sure to keep watching. All right, number 1. If you're in bad health or over the age of 70, this may not be the best option for you. Now, I know some people will tell me, they're like, am I too old for this? I had somebody ask me that just last week. He's 53 years old. I said, buddy, I'm only a few years younger than you, and this is a great strategy for us. So no, you're not too old. But if you are over the age of 70, this strategy doesn't work as well, because the older you get, the more expensive it gets. And so the faster you implement this, the faster you lock in those rates when you're younger, the better. But again, if you're in your 60s and you're in decent health, this could still work, even in your mid to late 60s. But if you're in bad health, maybe you're a smoker, or maybe I have somebody who's like, sometimes you get people like fighter pilots, which they're a little bit higher risk occupation, something like that. That can make it a little harder. They can still work. In fact, we still did it for some fighter pilots, for example, in the military. However, but if you're in a situation where you're a smoker, maybe you're extremely obese or have bad diabetes, something like that, then this may not work for you. However, it may work for someone else that might be a family member of yours, like a spouse or a child. It could also work for sometimes kids or grandkids. It just depends. So there are some options out there. But again, if you're over the age of 70 or in bad health, although they may not say this to you, I personally, this strategy doesn't work as much. If you need life insurance for a death benefit purpose, there are ways to do it that may not be as intricate as what we talk about with infinite banking. Number 2, one of the biggest mistakes I see all the time is you just go with any infinite banking or any kind of whole life policy out there. Yes, you go with Jake at State Farm with his khaki pants and his little polo shirt, and you think, hey, State Farm, they're like a good neighbor. He's there for me. It's got to be good. No, it's not. I can tell you and assure you this. 1, I've talked to a lot of State Farm guys. They don't even know how to do this thing. 2, and I'll tell you this too. Even if they talk about infinite banking, even if they say all the right things, sometimes they're still in it for themselves. Not all infinite banking policies are created equal. And at the same time, not all agents are created equal, because sometimes they just don't know how to do it. Because the truth is this. I know this because I've been in this industry for the last 20 plus years. And insurance companies don't want to teach you a strategy that helps you really milk the system, right? To make the most money for yourself. They want to make money for themselves too. Of course, they want to do what's right by the client. Yes, they want to make sure they cover you and all that kind of stuff. However, they're not going to be forthright in saying, here's the way to get the biggest bang out of the buck. How to milk all you can out of this sucker so that you make more money and not us. They're not going to do that. And the truth is, most insurance agents are just that. They're insurance agents. Their career is to sell you insurance. And if they don't sell insurance, they don't make money. Because unlike myself, for example, I have more than enough money coming in at passive income from my real estate to pay for everything. I actually don't need this business. I can shut down Money Ripples at any time and be just fine, because I have so much money coming in from the passive income I make outside of it. However, the reason I'm doing this is because I've seen what happens in this marketplace, in this industry, where it's hard for you, especially when you're trying to look at what's the best option, it's hard to tell what is. And usually you just go for the person that you feel safe with, right? That you feel like they're in your best interest, and they might be. I will tell you this, I think 95% plus of those insurance agents out there feel that they're doing the best they can for you. There's the other 5% that they just will try to screw you anyways, right? But the vast majority really do want to serve you and help you, but they just don't know how. Either 1, they don't know how, or 2, they have a conflict of interest because they know they just don't want to cut their commissions back. They want to be able to make a win for you while still making a win for them, but that still costs you a little bit more than it should be. And here's the other key point too with this, is that not all insurance companies do it well, right? There are some insurance companies that no matter how hard I would try to work and manipulate their numbers to be in the best interest of my clients, they just never win. There are certain companies that do better than others. Usually they're mutual companies in the United States here, right? They do the best typically, but there's usually only just a handful that are really good. The rest of them, I'm always shocked that some of these infinite bankers will write with those companies because, well, most likely because they either have some contract they have to meet some minimum requirements for, or 2, because they offer a little bit more incentives to pay you more. I'll tell you this, I've been offered by other insurance companies to make a lot more in commissions by selling their product than the ones we often use. The reason I don't do it is because I tell them, I said, listen, until you can beat these other companies, I'm not going to do anything with you. And that's it. And that for me is just a hard, firm rule. Like you got to be able to do what I know every single time will give our clients the ultimate best return on their cash, the best cash value returns they could possibly get on that tax-free savings account there. So that's essential. Here's another big mistake I see with infinite banking, because they'll tell you everything from like buying cars, buying your house, and getting debt-free using this kind of stuff and whatnot. And heck, Becoming Your Own Banker by Nelson Nash. You hear these kind of examples, but understand that when he wrote that book, it was a very different environment. Interest rates were even higher than they are today. So of course, if you knew you're going to be paying 18, 20% for a car, yeah, it makes a lot more interest for you to try to use this policy to, maybe if you're only paying like 8, 9, 10% at that time versus paying 20%, right? That's not the case anymore. And so what I see is a lot of people are telling you either one, it's like a bill pay type of thing. You pay all your expenses by using like your own checking account, and then you pay yourself back with your paychecks. Guys, the only positive thing I've seen there is for the insurance agent who makes a crap load more money. But I'll tell you, most insurance companies don't even want you to do that method. Not because it does anything wrong for them, but because it usually backfires on the client if something happens to your income, because you have to make the death benefit so high to allow that income to go in. And just so you know, most insurance companies don't want you to put in more than 25% of your income. So that kind of defeats the purpose, doesn't it? So there's a lot of little things like that, like using like your check bill pay type of accounts. Don't use it for that. Not worth the amount of interest you might make or save. 2, I don't use it to buy cars, at least not right now. Like for example, I just financed a car last fall. I got a 3.99% loan rate offer that I took. And by the way, I could have paid cash for that car easily, but I know at 3.99%, I can easily make a lot more money than 3.99% in my investments. So that's why I did it that way. But I didn't use my infinite banking policy. Why? Because here's what many of them won't tell you. They'll tell you things like you pay yourself back, right? Like you just borrow the money from the policy and then you pay yourself back. Well, here's the problem, guys. They make it sound like you're paying yourself interest, and you're not. You're not paying yourself interest. You borrow from an insurance company, they do charge you interest, just like any other bank. So this is why, like, if I can get a low interest rate loan on my life insurance, but I can also get a low interest rate loan from the bank, I'm going for the bank every time, because I would rather save my money in my policy to use for things the bank won't give me money for, or will charge me a lot of money for, like a credit card type of interest. But for low interest rates, even if it's 7.5% or 8%, I'm going to use the bank to go and buy that car. I'm going to also use the bank to get a mortgage. I'm going to do that because I'm still paying them interest. But the policy, I won't do that, because I'd rather use that money to invest to make more money in 2 places at once, like you've heard me explain maybe in other videos. That's where I like to use it. I like to get that money free to work harder for me. And I didn't mean to make it rhyme, but it happens sometimes. And I didn't want to make that rhyme either, dang it. Okay, anyways, moving on, right? So remember that all these things about financing it with this and that, vehicles, cars, houses, all that stuff, don't even worry about that kind of thing. That is not what it's meant for. 2, here's another problem I see, is having too high of a minimum payment. So many times, like when you get a traditional whole life policy, the minimum and the maximum are pretty much the same. Right? Like I had one friend that wrote a policy, and bless her heart, she's a great woman, but she wrote a policy that person was putting in $30,000 a year, but the minimum was $29,900 per year. So this guy had to pay $30,000 a year every single year. If he didn't, he could possibly get in trouble, or even worse, lose the policy and all that cash is gone, or all the cash he paid into it, nothing to show for it. This happened to me with my first policy. When I was first learning about real estate investing, I quit being a financial advisor, the traditional salesman in a suit, and I started doing real estate investing. I got referred to an insurance agent that set up other policies for these real estate investors, and they were all about infinite banking. It was the best thing in the world. However, when he showed me the policy, for those first 2 years, there was 0 cash value, 0 in that savings account that I could use. And I said, well, isn't there a better way to do this? And he said, no. If you put in more money, you trigger taxes, and you don't want taxes, do you? Oh, no, I don't. Of course not. Okay, then don't do it, Chris. And so I just kept putting in that $1,000 a month. Well, 3 years in, the recession hits. I didn't have the cash flow to fund it. I lost that policy after paying in $25,000 into that policy. It was gone because there was no cash in there. Why? Because it was done as like what's called a straight premium type policy, right? A policy like the traditional whole life policies you might buy from Jake at State Farm. Those kind of policies right there didn't have any flexibility. And the minimum was the maximum payment, right? So I couldn't put in more than $1,000 a month, but I had to keep paying $1,000 a month. See, when we set up our policies, it's different. Like if someone says a policy for say $20,000 a year, the minimum is usually like $4,000 or $5,000 a year. That's the required payment. So people are saying, well, I got to put in $20,000 a year. No, you don't. Not with our design. With the way we design them, you only have to put in that $4,000 or $5,000 a year, and that's it. And that's assuming you could probably pay more than $20,000 a year, but we try to make it go conservative that way. I've even had people that told me, yeah, Chris, I could probably save $100,000 a year. I said, great. Then we're going to put our max at $80,000 a year, knowing that our minimum is going to be no more than about $20,000 a year, which for you is about 2 or 3 months worth of savings anyways. Like you'll be able to save that no problem. You get some flexibility in case something happens. And that's important. So you want to make sure you want that flexibility in there. By the way, I found out later, because of what happened to me and losing that money from that policy, I found out that that insurance agent lied to me. He could have done it better for me, but the reason he didn't do that way is because he didn't want to cut his commissions by 80%, like the way that we do in our policies. He didn't want to cut his commissions back because that's how he's paying for his family. He told me he was free from real estate investing, but the truth is he wasn't. He was only making a lot of money because of selling insurance. That is the big problem in the insurance industry right now. Those insurance agents are career agents. They have to make money. That's the only way they can feed their family. And that means there's a conflict of interest between you and them. How do you make sure you get the best every time? You have to make sure it's always in your best interest. All right, and the fifth and final point, and I'm starting to see this more lately, is that people invest in bad things with their policy. For example, sometimes people will say, I'm going to go throw this money into stocks. Well, what if you lose the money in stocks? You still have the interest of being charged on that loan you got. Yes, you still have the cash that's been secured over here, so you're still earning interest. But if that money loses, you feel like now you're kind of a little bit more broke because you've just lost the savings that you had. If you put into bad deals. I just talked to a guy over the weekend. He had actually put some money in some bad apartment deals. Those deals lost money. He's now saying, well, now I've got interest being charged on this loan. I guess I better try to at least pay the interest so it doesn't compound against me while I'm also earning interest at the same time. But he's like, I had $250,000, I lost in an apartment deal. Yeah, exactly. You got to be careful. Bitcoin, people throw money in Bitcoin. Oh, I can make so much more money. Imagine the amount of extra money I can make by using that return to pay the policy and make more. Guys, the whole speculative stuff doesn't work. I personally, for me, I don't feel secure doing anything unless it's backed by real estate or some other real asset or something like a business where I have control of that business. Otherwise, I don't want to use my money for those kind of things, right? So be sure that if you're going to use this, use it for things that actually are going to be in your best interest, that have some security behind it, just like any other bank would too. So those are the top 5 things I would do to avoid making big mistakes when you're using infinite banking. Again, there's so many more things you could be doing too, but I want to keep this video short for you. But if you'd like to know more and you want to see how this really works for you, go to moneyripples.com, reach out to an insurance specialist. He can really help you figure out what's the best design. How does it look best for you where you get the biggest bang for your buck and ensures that it is in your best interest. Unlike what I've seen in the industry, it can actually be done the right way for you so you can make sure you get the best bang for your buck. Go do that today.